A student loan servicing company is being sued after they were caught illegally collecting payments from people who thought they had their student loans discharged. Now, this does not concern federal student loans. So now the Consumer Financial Protection Bureau had filed a suit on Friday against the Pennsylvania Higher Education Assistance Agency, otherwise known as FIA, which is, again, a student loan servicer that works with the American Education Services to facilitate the private student loan program. So FIA has been accused of illegally collecting payments from people who had already had their loans discharged through bankruptcy. Not only that, but they sent false information to credit reporting agencies about these debts that didn't exist. So they were taking money from people who had already went through the bankruptcy process and said, well, they still owe us money, so obviously I'm gonna wreck your credit score even more. Which, look, if you've already been through bankruptcy, it's already bad enough without then these servicers adding more to it. So it just makes it even more difficult for you to actually financially recover. So now, FIA, as I mentioned, this is according to CFPB Director Rohit Chopra in a statement. They've ignored its responsibilities and illegally pursued borrowers for loans that they no longer owe. The lawsuit filed in the U.S. District Court for the Middle District of Pennsylvania said that under U.S. Bankruptcy Code, some private student loans are not subject to the more stringent standards that most federal, and yes, even private student loans are when it comes to receiving relief through bankruptcy. So it is notoriously difficult to get student loans canceled through bankruptcy. I mean, you can thank, by the way, President Joe Biden for that. This is back before he was president, but he made it very difficult for people who are bankrupt to be able to get rid of their student loans. And so it's very difficult, not impossible, but it's very difficult. In fact, you've got to be incredibly poor. Okay, you have to be actually bankrupt and not being able to afford your basic necessities for survival. We're not talking about Donald Trump bankrupt, right? Where it's like, went bankrupt again. Oh, golden parachute. No. This is really, really poor. In fact, a borrower usually has to meet something called the undue hardship standards, and it requires them to prove that they cannot maintain even a minimal standard of living, and that their circumstances are not likely to improve, and that they have made a good faith effort to repay their debt, likely at the expense of other things, other bills, right? So now in order to do this, you've got to go to court and to prove how poor you are, right? And even go through a mini lawsuit within the court proceeding, within the court hearing, an adversary hearing. And basically that hearing, you have to show that you are broke, that you have no prospects whatsoever to be able to get a better job or get higher income. So these are people, for example, who are permanently disabled that have to go through something like this to get their student loans discharged. And that requires court hearings, lots of paperwork, et cetera, et cetera. Now, the court determines that the borrower has reached their maximum earning capacity and will not earn enough to pay the loans and support their family. Now, other ways that you could do this, where, you could be a married couple that works but still earns just barely above the poverty level and spends more than they earn despite having a very tight budget. So they would have you, basically they would have you fill out like what you spend your money on. What is your monthly budget versus your income? And they would have you eliminate any kind of spending that, for example, no Netflix, no lattes, no eating out, nothing like that, okay? They would have you cut those expenses and direct it, if possible, towards your student loans. But if by chance you are so poor and have so many expenses that are necessary, we're talking about food, we're talking about housing, right? We're talking about utilities, things like water, okay, and electricity. If you still cannot make those payments, then fine, okay, we'll discharge your student loans, okay? So that is the undue hardship standard, right? Oh, and by the way, part of that standard also includes situations where you've gotten a discharge because a court determined that the borrower could not or did not benefit from their education, or that the school/program was fraudulent, okay? So that's like a situation where if you went to a for-profit school or like Trump University, okay, and you know that your education is absolutely 100% worthless. It's not going to help you at all. So now the point being, though, is that, yes, there are ways to get your loans discharged through bankruptcy, but they're tough, okay? And they require very specific circumstances, and it's not a fun or an easy process. It involves a lot of time and a lot of paperwork, a lot of, just everything, a lot of proof that you can't pay these loans back, all right? Now, that said, that applies to the majority of federal and private student loans. Now, in this case with FIA, that's not the case, okay? Because there are some private student loans that were discharged without having to meet that stringent standard. These are called non-qualified private student loans. And this is money borrowed to pay for tuition at schools that actually weren't accredited or didn't qualify for Title IV funding, right? That is unaccredited trade or K through 12 schools, not federal loans. So forgiving them, by the way, doesn't because the main, argument of, we shouldn't forgive student loans. That's my money. Why is my tax money going to somebody's student loan? That's not what's going on, okay? These are the private loans from like a bank, for example. This is treated like any other unsecured consumer debt, right? And has been forgiven through bankruptcy. The issue, though, with FIA is that they refuse to recognize that this debt has been discharged in the first place. The CFPB says that they treat certain discharged private student loans as though the consumer still owes those debts. Now, the bank has already written it off. The bank has the ability to write off these debts, okay? And sometimes they're insured, okay, against losing that money. So, the bank doesn't really take much of a loss. They take a loss on what would have profited them from the interest and things like that in loaning out that money. But generally, they might not have lost anything in the case that it was, insured. That said, right, and a lot of loans are insured. But FIA, they're like, we're going to treat these loans as if they're still active. We're going to collect them. Well, now wait a minute. Wait a minute. If you're collecting them and yet they don't owe them, well, you're taking money from people who have already had this discharge by going through the bankruptcy process. That is going to harm them significantly. In fact, the CFPB says FIA's failure to distinguish between discharged and non-discharged private student loans, its collection of discharged debts, and its furnishing inaccurate information to consumer reporting agencies is likely to cause substantial injury, as consumers will either pay the debt they don't owe or risk negative credit reporting and default for non-payment. Per the CFPB, American Education Services collected or tried to collect about 7,934 private student loans after bankruptcy proceedings between 2017 and 2021, and 177 of them were non-qualified education loans. So now look, there's a lot of private student loan bankruptcies that have happened. And again, some of them, 177 of them, were non-qualified. And a lot of them were forgiven. Doesn't matter. Doesn't matter. They were paying for debts. People were paying for debts that were no longer valid to the servicer. It's pretty messed up. Now, that said, I'm glad the Consumer Financial Protection Bureau is taking these steps and actually going after these servicers. Long overdue, because this place has screwed people over before. On May 6th, for example, the CFPB had filed a different complaint and proposed stipulated judgment, which, if approved by the court, requires FIA and the National Collegiate Student Loan Trust to pay more than $5 million for student loan servicing failures, including failing to provide accurate information to borrowers and incorrectly denying forbearance requests. So it's good to see the government cracking down on these servicers that have been doing a terrible job, right? Taking advantage of borrowers who technically didn't even owe that debt in order to make a profit. And that's, again, some of the issues with these private companies. In fact, according to an article in the American Prospect, these companies have a mile-long track record of errors, wrong names, wrong addresses, and wrong payments. CFPB examiners had also found that borrowers are facing long hold times when trying to reach servicers by phone, significant delays in servicers processing for their applications for income-driven repayment, and inaccurate billing statements. These companies have even been compared to the mortgage servicers right after the Great Recession, who also messed up extremely badly. So now the issue here is, why are these loans, the majority of them, handled by a mishmash of for-profit corporations who, as a matter of principle, ensure to cut their servicing costs to the bone? So this is the cost of like having people actually work on, servicing the debt, keeping track of records, making accurate records, going through and doing customer service, all of that stuff. Now, I know customer service, right? All of that stuff, they've managed to try to cut as much as they can because it helps pad their profit margins. That is the problem here, especially when it comes to federal student loans, okay? Where you have these same servicing companies that don't have any customer service whatsoever. They don't have good record keeping, and yet they're authorized and paid by the government to collect on these student loans. No, there should not be any of these private agencies, okay? No, there needs to be one federal agency that will act as the servicer instead of these for-profit corporations, which are in competition with each other for federal contracts, by the way. And one of the reasons they keep messing up so badly is because of this massive incompetence fueled by their innate and insatiable greed.